Greetings, everyone. I'm excited to welcome Amr Awadallah, founder and CEO at Vectara. Amr, welcome to the show.
My pleasure to be here.
Well, it's great to have you here. Excited for the episode today. So let's dive right in. Tell us a little bit about your background.
So right now I'm CEO and the co-founder for Vectara. Before that, I was VP of Developer Relations at Google Cloud for 2 years. And before that, I was founder and CTO of Cloudera, which was one of the very first big data companies and went all the way to be a public company on the New York Stock Exchange. Though about a year and a half ago, 2 years ago, they got acquired back private by a private equity firm. Before Cloudera, I was at Yahoo for about 8 years. They had acquired my first startup. So this Vectara now is my third one. And then before that, I was at Stanford where I did my PhD.
Oh, awesome. So really looks like kind of that founder entrepreneur background from the start. And so is your background, is it more on the technical side or commercial side?
It's more on the technical side. So this is the first time I do a CEO role with the Vectara organization. Historically, I've been CTO role is what I was more focused on. And by the way, just as a backstory, when I came to the US to get my PhD, I'm from Egypt, by the way. So I came here in 1995. My goal was not to be an entrepreneur. My goal actually was to be a professor and teach, because that's what my dad taught me all my life. That's what you're going to grow up and do, because my dad himself was a professor of economics and accounting at Cloudera University. But then I frequently joke and say that Stanford corrupted me away from this teaching mission, because Stanford, they deserve credit. They're so good at implanting you with the entrepreneurship bug. They give you so many courses and lectures around the non-technical aspects, like how do you make up a pitch, how do you create a business plan, how do you do sales, marketing, all that kind of stuff. And then they invite many folks from the industry, like the founder of Oracle or the founder of Intel or the founder of Yahoo, or nowadays will be Google, come and give a talk. And so you get to see these founders, and then that removes the myth of founders are these amazing people that have wings and can fly. It's like, there's just not normal people that have the grit to work hard and make their dream become a reality.
Yeah, I could see how that's sad for an environment. Would it be hard to pay, like you're bit with that startup bug, or trying to start your own venture? Yeah,
right. And of course, the Bay Area, like Silicon Valley. I always also say, like, I was very surprised when I landed in SFO for the first time, and then you're going in the highway and you see the Oracle building right there on 101, just like, this is Oracle right there. So that also, I think, gives you the answer. It's like, these are normal, these are like things we hear about, but we can make something like that.
Yeah, definitely. Always fun to see that. And so tell us a little bit about Vectara. Again, this is your third company now. So tell us what products and services Vectara offers.
Yeah, so imagine you have an intern working for you that has a photographic memory. They never forget anything. They are multilingual. They can speak 30 languages, English, German, French, Chinese, Japanese, Korean, whatever. And they read everything you care about, not just that you care about, that whoever is in your role cares about, whoever is before you or after you, so retains the memory across. And now you can brainstorm things with that intern. You can ask them a question. Oh, last time when we looked at this situation, what did we decide? Can you explain the first reason? Can you explain the second reason? Okay, can you help me write now an email that summarizes these reasons so I can send that to my boss and tell them this is why we shouldn't do this, right? So imagine that, and that's what we do. Another way we describe it is as Chat GPT, but for your own data, right? It's the same kind of experience you get with Chat GPT, but the generative output is grounded in your own data. So it's not coming from whatever Chat GPT knows about the world or whatever they're able to hallucinate and make up. No, it's coming from your own data and your own memos and your own emails and your own Word documents, PDFs, et cetera, et cetera.
Okay. And I was reading, and so you're be able to use that power of, say, like a Chat GPT, but apply it to your own data, but also make this easily accessible for your customers then to do this, so they don't need that experience of building out these big models.
Exactly. So there's two ways you can build out this kind of capability end to end. You can go work with OpenAI. You can work with a vector database company called Pinecone. You can work with another company called Hugging Face or Cohere to get the models, and then you stitch them all together to make this work. Our power and the thing that differentiates us from all of these vendors in the space is our simplicity. We have a very simple API. You need to know nothing about large language models or machine learning or natural language processing. You simply call the API once to upload the data in many formats, and then you call it you call the API with your query or prompt or task, and we perform it for you. And we take care of optimizing that entire pipeline so that you can be up and running in no time. And that's
So
exactly how.
Okay, so yeah, so you're making it easy for developers, engineers out there, then just hook to your API. You've built out all that back end, all the processing, and then they can probably, then have fun with that, through the API. So tell, like, who are you talking? What kind of customer profile are you targeting? Are you targeting tech companies, manufacturing? Like, who are you going after for customers?
Excellent question. First, I think this is applicable to any customer everywhere. Like, everybody has knowledge that they're working with, and they want to be able to brainstorm and leverage that knowledge continuously. The two use cases we're very focused on right now is first customer support. So customer support lends itself so well to this, like, because you already have written many knowledge-based articles about how to solve that problem, how to solve that problem. And if you have this genius brain that can read all of that and give you the perfect answer every time, who would not want that? So that's the number one use case that we are focused on. The number two use case is knowledge discovery. And knowledge discovery is a use case that's more specific to people that leverage knowledge continuously in their job. So think lawyers working on contracts or working on doing legal reviews. Think investment analysts looking at previous investment memos, pitches, and trying to make a decision whether to invest in a company or not. Or pharma researchers looking at different types of research and drug trials to make a conclusion. Or somebody in the news, just following the news and wanting to stay current on what's happening right now because they're about to write a blog post or they're about to go on a podcast like this one, and they want to make sure they're saying accurate things. So that's these are the two use cases that we're primarily after, but we think this technology can be applied in many other use cases as well, like legal e-discovery, anti-money laundering, e-commerce search, enterprise search. There's many other applications for this.
Yeah, so widespread use, which it sounds like. So yeah, any company out there offering customers support, or if you're a knowledge worker or discovery, yeah, you can apply Vectara to it. And so your model, so API, so would this be usage-based pricing, so variable revenue streams coming in?
It's consumption-based, yes. So we charge by bundles, and the bundle has two components in it. One is how much data you're consuming, how much data you're uploading in our platform to store and leverage in this capability on your behalf, and then how many API calls you're making against our platform. We have a freemium offering that gives you 50 megabytes of data, which sometimes people think that's small. That's text data. 50 megabytes of text data is a lot. That is the Harry Potter series. Entire series stored 5 times over. That's how much you can keep in 50 megabytes of text data. And then we give you 15,000 API calls for free. So that's the starter freemium that you can be up and running, try it out, make sure it's fulfilling your needs. And then if you decide, oh, I like this, we charge $1.25 for every additional 1,000 API calls and 5 megabytes of data.
Okay. Yeah, like that. Yeah. Okay. Yeah, makes a lot of sense. And then what year did you found Vectara?
So Vectara was actually started by my co-founders who left before me. They left Google before me in 2020. And they raised a very small amount of money at that time, $1 million. And they were focused on getting the main initial system done. And then I joined forces with them in 2022, in January of 2022. In fact, the first day of the year of 2022, that's when I started. And then we raised a significant amount of cash, about $20 million at that time. And that's when we started to work in earnest on launching our product. And then we launched our product last October 12th, 2022. That's when we launched publicly.
Okay. All right. Yeah. Now we'll maybe circle back to that time frame with the fundraising story. And where are you guys located? Do you have a HQ or are you all virtual?
Yes. No, we have a headquarters in Palo Alto.
Okay. Palo Alto.
And funny story, the headquarters we're in right now, my previous startup, their name is Cloudera. So they had that building, but they had merged with another company called Hortonworks. So the building is still theirs because of the lease, and it's very hard to get rid of leases right now, given what's happening in the world. So they were generous enough to let me sublease part of that building for my new company. So I joke and say that Vectara, for me, sometimes feels like the movie Inception. You know the movie Inception, where you had a dream inside of a dream? So the same thing, like
yeah.
I'm a startup inside of a startup right now.
Yeah, funny. All right, so Palo Alto. And then what's your current team size?
We're 25 people right now.
25 people. Okay. And anything you want to share around your revenue range, ARR size?
And I don't
Can't
share
share?
revenue.
Okay.
Yes.
Okay. And then tell
But
us
we
a
are
little
making
bit.
revenue. We are
Yeah,
making
so
revenue.
your revenue, so not
Yes.
pre-revenue. Okay, that's good to know. Talked to a lot of founders still in that pre-revenue stage. And then tell us a little bit about your one, AC, like
we are making revenue. So we're
yeah,
post-revenue, but we're pre-scale. Yeah.
Yep. So making money and then scaling up. And tell us a little bit about your go-to-market motion, and then also with your ACV. I don't know if you're getting $1,000 a month, $100,000 a month, but tell us a little bit about how you're finding your customers.
As I described, our business model is consumption-based.
Mm-hmm.
So it's what's commonly known as the land and expand business model.
Mm-hmm.
Right? So our goal is to land the customers, even if they land with $1, which, by the way, that's the minimum you need to pay us, is $1.25. That's the minimum to get this Actually, the minimum is $0 because you can start with the freemium offering. But once you start paying, you're paying $1.25 for every 5 megabytes and every 1,000 calls, API calls. From there on, our job is to try to grow you as much as we can, to get you put more and more data into our platform and consume more and more API calls. So that's our business model at the high end. Now, how do we find our customers? We have a hybrid. We're going after a hybrid motion. So we're doing both a product-led growth motion, where you can come to our website, you can have whatever use case you like to do, and just start using us with the freemium offering, and then eventually you upgrade to start paying us. And then we have a sales-led growth motion, where we're directly going after use cases like the ones I described. We're going after support use cases within organizations. We are going after legal use cases. We're going after pharma use cases, financial and news cases. So these we are explicitly going out and hunting for right now as well. So it's a hybrid motion.
Yeah, no, I like that. So PLG, and tell us on the SLG side, so the sales-led growth, are there two components to that? Does it at some point kick in with your existing customer base where they reach a certain point in the PLG motion, and then you apply a sales force to that to then further expand them?
Excellent point. So two criteria. One would be if we see their size now getting to a point where, we would benefit from having a sales agreement, and try to sign them up for 1 year of consumption ahead of time and give them a discount so we can get a bigger deal right here, right now, which is very good for cash flow, as you know. So that's one criteria for when the sales team would engage with somebody that came through the product-led growth motion. The other aspect, if it's a large company, like if a big bank or a big telecom company or a big manufacturer came in on the PLG mode, we right away, a salesperson would call them up and say, how can we help you be more successful?
Yeah, I love that. Yeah, if you see some Fortune 20 sign up, then it's like, hey, let me give those guys a call. Okay, yeah, really interesting. Of course, PLG is so common, well, now common today, but just really interesting of how that motion evolves over time, and then eventually that sales-led motion kicking in to put, really accelerate it after that.
Exactly. That's why I figured let's just start doing both at the same time. Like, let's not sequence it that way, because it does create a hiccup. Like companies, like I know, for example, one of the great success stories for SaaS companies that we all look up to is Atlassian. And Atlassian, they have products like Jira, Confluent, and many others. And they were very product-led growth focused for their first many years, I think, until the IPO. And then they saw that, that's not going to get us the growth rates we need to be able to grow into a well-valued public company. And then they added the sales-led growth motion at that time. It took them some time, but then eventually they figured it out. But it took time, so because it takes time to change the DNA of the company to be more amenable to that. So I decided, I'll just do both at the same, like from the beginning.
Love it. And so it sounds like capital raised today, initial $1 million round, and then recently last year, $20 million seed round. So 21 million raised to date. So tell us a little bit about that journey. From the 1 million was there a product? Were you selling the story, then $1 million to start creating the product? And tell us a little bit about the $20 million raise.
Yes. So it's a bit more actually involved than that. So let me explain the process. So the 1 million that was raised in 2020, that was a friends and family round, essentially. That my two co-founders did at that time. So actually, there was one VC that came in. That came in. They put $500,000. Their name is Riot Ventures. They're a VC from Saudi Arabia, actually. So that was the round that was done, and it wasn't a round, by the way. It was a safe note, right? So that came in on a safe note, which is the promise simple agreements for future equity template that many of us use here. Same thing, when I joined forces with them in January of 2022, we went out and we raised an additional 19 million, actually, on top of that 1 million. So I misspoke earlier. And that was also done on safe notes. So that was still not a priced round. So that was still safe notes. And then we started to build out hire out the team, but we were having conversations with investors. And then many of the investors I was planting the seed with to start doing the Series A when we're ready for that, which is we plan to do next year. They were recommending, before you come for the Series A, it would be very good if you convert these safe notes over because it's cleaner cap table wise to do that than to wait until the Series A takes place. And we were fortunate that an amazing VC firm, early stage VC firm approached us. Their name is Raise Capital. And they agreed to let's lead a price round for you folks, and they became the lead, and that happened very recently. That was about like a month ago, maybe we announced publicly. So we raised more money from them for a total. So when we close the seed round now, the price seed round, the total was 28.5 million total raised.
Okay, 20.5 million raised to date. And tell us a little bit, because you've got a lot of experience in SaaS and startups. The triggers or milestones that led you to say raise that 19 million safe, and then you raised another priced round here. What did you see that said let's raise some capital?
Because consumption business models, as you know very well, they start land and expand business models. They start with low cash at the beginning, and then the cash flow adds later on as you add more and more consumption within your platform, which means you need to be spending ahead of the curve in terms of sales and marketing until you get to that point. And that's exactly why you need to fundraise. Otherwise, actually, you wouldn't. The only reason you would need to fundraise is just the engineers and paying their salaries, I guess.
Yeah.
So that was the logic for why. Now, the additional cash from this additional, like the 8 million that we raised this year, in addition to what we had before, you can argue that was not needed per se. However, we also saw a macro effect happening, which is in our space, the Gen AI space, the large language model space. Companies started to move very quickly. Even larger companies like Microsoft and Google also started to move thanks to OpenAI with Chat GPT and so on. So then we figured, okay, now clearly there is a race. Like this is clearly now product market fit has been proven. And there's no doubt about that. And now it's about very good execution to capture for the land grab and for capturing a big share of this massive new movement of systems that truly understand language and can help us do our jobs a lot more effectively. And hence, we need to be spending more on expanding our sales organization and our marketing to be able to capture that, and partnerships as well. So that was the logic for why to add an additional 8 million this year.
Okay, yeah, thanks for that insight. So yeah, that makes sense. Yeah. And tell us, with those raises, for other founders listening, any lessons that you can share, because obviously you've got a long experience in tech, but any lessons you can share with those raises that it's like, hey, I wish I did this differently, or something, that you could share as far as other founders who may be at that same point.
Yeah, I always give two advice in answer to that question. The first one is, we as entrepreneurs in our early stages, we're creating a company, especially if it's our first company, we are beggars, we're not choosers, right? We're literally begging for money. So it's like, if somebody comes to you and say, I want to give you money, you take it right away. It doesn't matter what. Of course, the terms need to be reasonable, but I'll say that's gonna, especially if it's your first startup, and you have to keep in mind that for your first startup, the chances of success is 10%. Like one of every 10 companies is going to make it, the other 9 are going to fail. So it's like really bad odds. The chance that you will become a public company at that stage when your first company is more like 1 in 1,000, right? So I would say that one of the biggest risks you want to mitigate is extending your lifetime and making sure you have a sufficient runway to not only try out your concept and make sure it's working, but to also be ready to do a pivot if you need to do a pivot, which many successful companies came out of pivots because they were smart enough to retain their cash. Like, for example, Slack. Slack is a $20 billion company. It was a pivot out of a gaming company, right? Their first product was a game. They were literally building a game, and as part of that game, they built this communication system for the game that they said, okay, let's take that and make that a product. And that pivot worked great for them. So you always want to make sure you have that. So that's my first advice I give. The second advice I give now as a repeat entrepreneur is, as you prove yourself, the risk is going down because you have done it before yourself. So now this is when you start to be more cautious with the dilution, how much equity you're giving to the investors. You still want to be fair to them, but now you have the ability to be also more picky and choosy, as opposed to begging for cash left here or there. Make sense?
Yeah, it makes a lot of sense. Yeah, I appreciate those two insights. In at the stage of your company right now, do you have a favorite number or metric that you're focused on?
Absolutely. I mean, I'm trying very, very hard to work on one key metric, which is net dollar retention.
Okay.
That is, in our world, in businesses where land and expand is how you're gonna operate, net dollar retention is king. Like, that's what proves you have a business that is worth scaling up, that's worth spending money on, because not only are you assuming you get that to be in the 160 range or above, not only are you retaining the existing customer and getting them to spend 100% of what they spent before, you're expanding them to pay you more as you go. I mean, that's a no-brainer. That clearly now that means that you have a massive market opportunity in front of you. So that's the key metric we're focused on right now. We're not focused on the absolute revenue number. I mean, that's great. We're going to be trying to get that as well, but that's secondary to getting customers in, even if they come in small, but then show that they expand as they start to like the service that we're offering.
Yeah, and that's really interesting. And you made that point clear, I think, was with that PLG motion, the land and expand, right? That's the whole point of net dollar retention, where other customers, maybe I've got a traditional SaaS, I'm selling $1 million enterprise contracts, I got a couple customers. Well, maybe not much going on there yet for net dollar retention. And I don't have a big enough product line yet to expand my customers. But for PLG, it sounds like you're saying, hey, right from the beginning, you need to be focused on this number.
Exactly.
Yeah. Well, I really appreciate your time today.
Sorry, Ben. Sure. And also another key thing is to make sure is the revenue that's coming into you is diversified, right? It's not just coming from one customer that gave you $1 million. That actually is not good for your funding. Like, investors always look at that and say, you were lucky, you just got that big deal, right? Which actually is true most of the time. You want to show that, no, you have a healthy mix of 20, 30, 40, depending on your, like, which use case you're going after, but a healthy mix that shows the revenue is not focused on one customer is 90% of your revenue, and then the remaining 10 are 10% of your revenue.
Yeah, no, great point. Yeah, that company or customer risk in one basket is really important. Definitely something that's always looked in due diligence, right? So, yeah, so I'm really appreciate your time today. As we wrap up, tell us what's next, what's coming up that's new and exciting for Vectara.
Yeah, so I mean, as we said earlier in the conversation, I mean, there is a massive opportunity in front of us. This opportunity now has been proven by Chat GPT, growing to 100 million users in a matter of months. Never happened before in our history. It shows that consumers want this, and if consumers want this, then businesses want this, because businesses care about information way more than consumers care about information. So there is clearly a massive opportunity in front of us, and there is many big vendors coming after the space, and it's on us to execute very well to make that succeed. And what we want to offer you as organizations coming to leverage us is a very easy plug and play solution for you to get ChatGPT for your own data.
Yeah, that's awesome. I love it. So if listeners would like to learn more about Vectara, where should we send them online?
I would say two things. I mean, first, make sure to go to our website, vectara.com. We have many useful information there. Our blog is full with very, very educational posts if you want to just learn about the space in general. And I would say follow me and follow Vectara on Twitter. My Twitter handle is my last name, Awadallah, and Vectara is Vectara, Vectara. By the way, very quickly, Vectara is driven from vector, and vector is how neural networks understand information. They convert information from English, French, German, our languages that we understand as humans, into a bunch of vectors in a very high dimensional space. And that's why our name is Vectara.
Okay, I like that. Yeah, it's always interesting how startups come up with their naming. So yeah, appreciate that background. So listeners, if you'd like to learn more about Vectara, check them out at vectara.com, and you can follow her on Twitter. And we really appreciate you sharing your experience and your tech insight today.
My pleasure. It was great to be here, Ben. Thanks for having me.